Good evening, all. Ira Epstein with your SPDR ETF wrap-up for a bearish day on this Monday. And it is June 13th, 2022. It could have been Friday the 13th. It was that kind of day. If you look behind me, it's pretty much a sea of red. Do you see anything up? I do. USO. It came back and it maintained what I called my enhanced Bollinger Band course. Stayed bullish. A lot of markets didn't. A lot of markets lost that. So let's talk about where we're at and what this market's about right now. The market is fixated now on Wednesday. If you turn on financial TV, is it going to be a 50 basis point hike or a 75 basis point hike? The Fed should have never, and this is what they're saying, Fed should have never cornered themselves in and said 250 basis point hikes. They should have kept their options open. These are the arguments you're going to hear. And the other one, does the Fed take the bold step, as Volcker did, and just launch and attack this inflation head on to get everything done with? If there's ever been a good time to do it, in all fairness, it's right now. Why? Because employment is so strong. And the quicker you tackle the inflation, when you have full employment, the Fed gets balanced. They have only two mandates. Their mandate is not a stable stock market. Their mandate is as close to full employment as they can and inflation under control. They got this one on the employment. They completely missed on this one, as did most central bankers. Ours didn't do anything worse than just about everybody else did. Trying to figure out in COVID what was transition, what wasn't, the transitory moves, the supply chains and all. Where I hate what American business does, I said it, and I'm going to keep preaching it. You got to get out of China. Completely out. You got to move your supply chains, other Asian countries, back to America. Could be God knows where, but you got to move them. Why? Their policy is that of killing their own economy and taking you down with it. More COVID cases have been discovered. Does President Xi back off? Save face is a very important thing in the Chinese culture. I don't know. I'd love to see him do it. The world would, and just say, hey, you've got to go out and buy some vaccines that work. You got to inoculate the elderly population. You got to stop these lockdowns that way and get on with life as most of the rest of the world is doing. Now that they've had more cases pop up in Beijing, the market is petrified. Copper took a beating today. XME took a beating today. They wouldn't if they felt that China was actually coming out of all this and coming up. That's my opinion. Do I know? Nobody knows, but that's my belief. The interest rate cycle, okay, it's going to go up. I'm not convinced by itself it's just interest rates or it's just China. The combination is lethal. That's what I believe, and that's where we're at. So, why would anybody want to play this going into Wednesday's FOMC announcement? Now, it's not just ours. On Thursday, you get the Bank of England, and on Friday, the Bank of Japan. You got a full week. There's a time where you pick up your chips and you say, I don't want to be too aggressive. I want to see what happens. I want to see the reaction to it, and then I come back. I've been around bear markets, done this 50 some odd years, owned stock firm, owned commodity firms, okay? Got this game. I understand it. I have been through this. I feel bad for the Robin Hood kids. They go in, they buy calls. Most of them expire worthless, as we know. They go in, they do the crypto stuff. You're watching what's happening in crypto? I still have yet to figure out. And believe me, I have neighbors here, I told you. They've got these plaid Teslas that they've got and all their toys. One of them, multi-million-dollar home in Florida, off of this. But they took their money out, thank God. Is this the buy zone? I don't have the slightest idea. What I do look is at a company like Apple. It's one of the biggest companies in the world, but look at it. If you don't think that's a bear market, what do you define as a bear market? You've gone from 180 to 130, 188. So is a third drop in price bearish in your opinion, or do you need it to go to zero? What's the number where it's going to find support? Let me share this with you. Nobody knows. I can give you ideas on charts. I can tell you that this is a vertical price drop. not a structured one, because you came from this high 4 days ago when you pressed up to 149.87 and you plunged now roughly $18 straight down. You're under the 18-day average, and what do I teach you? I teach you that what markets like to do is just this. Markets like to sit back, as I'm going to show you, and fight right here at the 18-day average of closes. This market had been in a downtrend, you can see it, went and fought its battle. Frankly, I had no idea which way it was going to come out of this. I mean, if you did, that's great. The weekly chart was giving me ideas, but not this. And then when this began, and this is only June 10th, I don't want to give you this as past history, today's the 13th, that's when the market starts letting itself go. But do you honestly think it was going to, let me get over here, I'm hitting the wrong button, just keep itself going like that? I don't know many people that did. It could have been the case. Look at the lower Bollinger Band. So if you were to put a gun to my head and said, Ira, are we in a zone where the market should try to hold? The answer is yes. Because each time before when you get these plunges, that's what the market tends to do. Is the market a buy for bullishness? It is not. It's more of a short cover for those that got short this market on that break than anything else. That's my own opinion of that. And momentum is oversold. So I can make the story for that. But what I don't know is what happens if the Fed goes 75 basis points instead of 50, and what if they went 1 full percentage point? You think it can't happen? I'm in the school they're not going to go that. Would I bet on it? No bet. I don't know how the Fed is looking at everything that's going on. That's the important thing. What I do know is if they look at the data, you're seeing commodity prices in a state of downward motion. Some might call it a short-term collapse. Isn't that part of the goal? Now that's commodity prices. You don't want to kill the labor. You've got to keep it somewhat strong, good and strong, so that you can get through this rough time with people having jobs, and there'll still be demand for goods, but they'll be scared and they don't buy the same things. Why do you think suddenly you're down in jets, Disney? People are starting to say, maybe I shouldn't go to Disney. This is getting a little bit scary. These are the things that are going on. AMC, $143 million opening for Jurassic Park. That's nothing to sneeze at. That's a solid number. And the stock's down. Warning you, I'm seeing real bad things in a lot of these companies. I've said that. I said also that I think the pros came out here and they'll wait and see if they can get that summer rally. I will not change that opinion, having known something about that business. Now we get to the chip makers. Yesterday morning, I went out with my buddies for breakfast, and we're all talking because we're talking Rivian. I had told them what I thought, and some of them did okay. And other people, you know, we talk about what's going on. And my buddy just bought the new Lyric Cadillac. So I said, okay, when do you expect delivery? He said 6 months. He's getting the one that's all-wheel drive. And he goes, that's if they have the chips. I said, that's the funny thing. I think they have the chips. I think that prices going down in SOX, AMD, and all these are telling you that the chips are not in as short supply as we used to think. Price does wonderful things. High price gets you chips. Companies want to make that money, and then they overproduce. What is the solution for inflation? High prices. Sounds funny, but high prices do away with high prices. What's the solution to get rid of low prices? They stop producing. Gets too low, you can't make the good. It's so simplistic, but that's how it works. The other element for the Fed right here is people have a lot of money because the Fed got them a lot of money for a decade. That's over. We gave people money during COVID. We gave all these things to get businesses, keep them afloat. Now we have a different environment. And the Fed is the market's enemy. You don't believe that, I know it, but it's the truth. They're the headwind. They used to have the market's back. They don't have your back. On the hard rallies, they'll do things to curtail them. Well, now that you're down this much, I don't know what the Fed says at this meeting. They can go 50 points and say, you know, we'll discuss 75 or a full point at the next meeting. The Fed likes to be fairly conservative, yet the market wants Powell, and that's Mr. Powell, I do respect him, to be aggressive. and take this thing head on and get this over with, whatever they have to do. That's what people want. People are always in a hurry. They don't understand the ramifications sometimes of that, but that's the story. Disney, come on. I thought Disney would be breaking out to the upside. If you were to say to me, Disney's making new lows going into June 13th, the kids, the parks are full, I wouldn't believe it. Truly wouldn't believe it. Their big movies are coming out, everything's there. Yet look at the beating this stock is taking. XLF, take a look at this. This is your financial services. Higher interest rates. You would think the financial services can survive. They can't. Look at this. But everything's down to Bollinger Bands. You know, come over here. Let's go back, if I could, just right here on Disney. You're under the Bollinger Band. Would I ever tell a client to go short under a Bollinger Band? There's not one circumstance you'll ever get me to do that. Same with XLF. I understand short covering fully. I don't understand buying under a Bollinger Band. XLI, the industrial sector, fell apart. This is the Fed. All right, our economy was strong for a long time. All of a sudden, need I say this, all of a sudden, as the Fed started talking to us 3 months ago about the raising of interest rates, the market started questioning this. Did this market peak out? Yeah. You know when all these markets peaked out? I heard somebody say it today, and they're right. This bear market began January 3rd. It was brilliant. Go back on your charts. That's when the bear markets began. You wouldn't know it. How could you? You're going up. Everything was rosy. But if you look back at the peak, about January 3rd, and a lot of stocks just followed suit with that. XSD, the semiconductors, same story. Oversold, down the Bollinger Bands. I don't get caught up with the emotion, not going to. This is the spot that if you were next to me, the elbow goes flying, and I'm telling you, cover your shorts. Home builders. No, they're not going out of business. They're pulling back. What are you going to do, guys, with 6% mortgage rates? LIBOR's jumping like mad right now. So mortgages that are tied to that are now starting to jump in other costs. This will get overdone too, but it's not the place to be. I mean, the peak has come and gone in housing. That's not to say select home areas, select price points won't do certain things. I'm talking a generality. You've seen the peak. Energy, was that the peak? I don't know. It certainly got me thinking, you know, if you start taking everything with big interest rate hikes, even with the shortage that we have in the oil and so on, you're going to curtail demand. That's what happens. As I said, I think it was, I don't know if I said it to you yesterday, but this morning, I was driving a mile from my house and $7.50 gasoline for premium. Never seen that in Chicago. Highest I've ever seen it. Maybe it was higher once before that I don't remember, but I don't recall it. Unbelievable, that price. And that's in the top area, the Fulton Market District, which is the hottest wannabe place where Google, Facebook, everybody has their corporate offices, all the trendy restaurants. I live right over there. Wow. $7.50 a gallon. All right, gold. No, you're going nowhere. Big failure day today. What do I mean by that? So if we take a look, you had an outside day to the upside on Friday. If what my new course teaches, if you take out that low, the odds are you're going to make a run at the closest moving average or the Bollinger Band, the closest of the numbers, all right? And what the market certainly did today is boom, it took out the low, went there, and it magically stopped. Wait till you see the course. I'm giving you some probabilities when you get an outside day to the upside, what happens when they lose it. I think you're going to like it because this particular formation is real common. You get this on charts all the time. GDX, same thing. 30.36 was the last low. You hit 30.46 today. Will you take it out? Well, if you do, I don't know where you go because you don't have any moving averages or Bollinger Bands under it. But today, not one of those days where it could hold up. Copper, oversold, down to the Bollinger Band. This was your top area. We had talked about it, and we were talking about China. Are they coming out? Because this was Shanghai opening up. First the rumor, then the fact, now the question. That's the difference. Now the question. When you take all those districts over the weekend that they're testing these millions upon millions of people in and want to do regular testing. Now they've changed it. It wasn't just a weekend. They might do this again on a regular basis. They're after finding COVID. They'll say they're stamping it out. Okay. I never believed Chinese numbers anyways. In this economy, they'll tell you they're still going to hit their 5% growth. Sure they will. You can make up any numbers you want. But that's what I think is going on at this point in time. On AGG, look at how the market is just plunging to the downside, all right? So you're getting quite a bit of a move here. You can see how the market has got itself where it could embed. We wait. But do you really want to be short anything? TLT, BND, any of these going into Wednesday? This is the time where you turn off your TV. You don't do anything for a short period. You wait to hear number one, the statement. Number two, the press conference. And after that, let the market do what I said's the yin yang. Remember, at 1:30 when the press conference is Wednesday, Asian markets are asleep. People sleep. Europeans are asleep. So we'll react to it one crazy way. Then we have to find, does Asia agree or change that? And then Europe, and by the time it comes back to us, I call it the yin-yang. You could be up, down, sideways. It's a rough one. After that, after the opening, within an hour or so, it's typically whatever it's going to be. It's telling you what it's going to be. UUP, well, need I tell you, the strongest market, the one market you could be long everything is the dollar. It's the killer. Would I ever tell you to buy the dollar over an upper Bollinger Band? It is not going to happen. It's excessive. It's overbought. I don't care what other people say. I don't care if it goes up to $29.50. No, because the one time you do it and you make money, that'll become your habit, and it's the wrong thing to do. It's like selling it here. Suddenly it's against you. It's like buying into it. You can do better if you want to do that. It's like going short here because it's going to break through. No, you don't do those things. You walk away from those type of ideas. And the flip-flop's true of FXE. The only thing I like about Europe is break the euro and it gets cheap to go there, right? If you can afford the airfare. That's, unfortunately one of the things we all have to do with. But that's what you look at. So in the mornings, if you haven't taken advantage of it, and I pray that you do, one of the things I try to do for you is set you up first in the futures markets, and then we take a look and try to go right to the ETFs. So at 5:30 in the morning, and this is how I actually do it. Let's see if I can get this to work for us. There we go. At 5:30 in the morning, I start my futures. Now in the futures, excuse me, I'm going to cover with you, and it's 5:30 in the morning. What happened already in Asia? News, market reactions. Europe, back to America. What reports are we looking at? Then I go through 40 charts with you, all video, and that's the beauty. You're not reading, you're seeing the pictures. They're done in such a way on the website where I put a scroll bar at the bottom of the chart. You can pull it and it says, oh, I'm in the grain, I'm in the metal market, I'm in the energy section, so you can go right where you want. But I'm going to cover that, and then I'm going to match it up. At 9 o'clock, I start recording, and I always wait till 9. I want to start recording my SPDR ETF. I believe that you let the first half hour of the exchanges get by you. And you'll say, why? It's where the algorithm money comes in, and you get the crazier moves right then. So I'm going to cover all that, make life fairly easy, see what we can find out for you, put it together between the futures, between the ETF, you get a game plan. And from the game plan, you see the pictures, you decide, hey, does that make sense to me? Look at the charts, look at the action that is going on. Yeah, I do like that. To find out about this, all you got to do is either go to our website under the word education or take your cursor, move it right up here. You heard me, just move it right up there. The icon will appear, and you'll learn about that right there. I'm Ira Epstein. You have yourself a great day. I'll see you first thing in the morning, and of course, in my next metal and financial market reviews. Take care.